Hello, everyone, and thank you for joining us for another edition of Legacy Building with AV. Before we even get started, if you could please hit the subscribe button, because that definitely will help us to grow and to bring a lot of other people to come and share their stories that could possibly help you, inspire you to grow in grow your vision, grow your business, whatever that may be for you. Today, we have the honor of having your Jamari Young, who's a hard money lender and a broker. So he's going to be sharing some of his insights, and we're excited. So, Jamari, hey, how are you today?
I'm doing well. I'm doing well. How you doing?
I'm good. I'm good. I'm excited. Like, I've never actually spoken to a hard money lender, so this is a first for me. Like,
Very, very niche, specific industry. So that's not the first time I've heard that.
yeah. So how did you even come about that? Like, were you like a banker or a mortgage lender and then you went to hard money lender? Like, how does that go about?
So it started with getting my mortgage license and doing conventional loans and helping people buy homes for their families, and just networking. One day, I met a startup, a guy who was starting a startup company. He was lending his own money through his own warehouse fund. He just had got a whole bunch of money from the bank that he was looking to lend, and I didn't really know too much about the space. I've heard about hard money at the time, but I just got on board. I had my license already, and I just started processing commercial stuff, and realized I can make a lot more money in the commercial space, and it's a lot. It's a lot easier to work through and get closings, get paid faster. So that was my intro, and I just started working as a process.
That's dope. That's dope.
Since at what age did you attain that, and what was the pathway to get there?
So I was 20. I was 24. I was 24. So, it means you study, you take the test. It was a very difficult test, and I had to get sponsored. So just like many, brokers, when you come in the industry, after you get your NMLS, you got to work for the first company. That sounds amazing. It just sounds like you're gonna just get rich working with these guys, but really, you're just getting the sponsorship, understanding the business from there, and it was a hard test. I took it twice, and that was it. You get the book, you study while you're working for the company. They give you kind of like a simulation of what it feels like to work, do a lot of the grunt work while you're getting the license. They'll pay for the license, and then you got to give them like a 2-year commitment. So from there, you'll learn, you'll make your mistakes. You do your calls, your cold calls, get what it feels like to find qualified buyers. You learn the laws, apply what you're learning. And then when you take the test, you kind of, they loosen the leash a little bit. You kind of get to meet your own, build your own, and build up your own, what works for you, what type of borrower works for you. So it just looks like a lot of studying, a lot of grunt work. And then finally you get paid at some point. That's a part of the deal.
And you mentioned focusing on commercial space. What would you say is the difference for you
So,
between commercial and residential, and why that preference?
so the preference is the qualifying for borrowers. Finding borrowers that qualify is a lot more simple. You're gonna find guys that are full-time real estate investors. So anything 1 to 4 is, as you know, is resi. For us, more than 4, or even commercials, anything outside of conventional financing, that's what we consider commercial. But um, it's just an easier process to get guys approved. If that's what you do, if you have a portfolio and you kind of know what the property's value is going to be, you know what you're doing on the construction side. It's pretty straight to the point. It has less to do with the borrower, more to do with the asset. So we get an appraisal, we have our underwriting process, but it's nothing like getting a conventional mortgage. No DTI, no taxes involved. It's just straight to the point lending, looking at what the property's worth now and what it'll be worth after you do construction, if you're doing like a 12-month.
So, like, what inspired you to become a hard money lender?
So when I first started processing, it was just getting through deals from start to finish, right? And that was fun because I was talking with borrowers and I was, making good money, and I was learning um, a lot. But the reality is the real money and how to get the funding and get the warehouse lines from the Wall Street lenders or just the banks itself. That was where it's just more upside, and I get to educate people along the way based on my own guidelines and how I like to do things versus working for another lender. So it's really kind of cool to educate people that have no knowledge of the industry, and then those that do, I get to be a face and an accessible point to get your deals funded in a niche market. Not a lot of people are familiar with hard money lending or how to or soft money lending for their 30-year mortgages and things like that. We service everything, ground up, fix and flip, cash outs, purchases, 30 years, the whole nine. So for me, I get to control it a little bit more with being an actual lender, even though at the end of the day, we're all brokering to the same no bias.
So
So,
basically, like a bank, like
Right, right. It's like a bank. It's like a bank. It is the bank.
so is it more like the bank, or is it more like brokerage, to where you'll find the bigger money?
So all hard money lenders, the way the business works is just like any other loan, it gets serviced to a bigger, you know, lender, the big bank that's
Fannie
gonna.
Mae or Freddie Mac?
Right, the Fannie. So for us, we answer to you got companies like Torac. Torac pretty much sets the bar for how they're gonna buy their notes. So you lend money based off of what their parameters are. So when you make your money on points, you make your money on interest, they'll buy that note a month after closing, even shorter if time frame if you have the team to set it up. But essentially we all answer to somebody like a Torac like company. So it's brokering at the end of the day, but you're lending your money on the front end enough to hold it over until things get funded, and then you can get your money back and move on to the next loan.
So when you're working backwards like that, based on their guidelines, and their guidelines are probably constantly changing from month to month, based
Absolutely.
on like the 10-year note and or other factors, how do you like ward off the risk, right? Because you might be hoping to close within 30 days or 2 weeks, but sometimes things drag out. What are some of the strategies you implement in order to like, avoid those obstacles?
So as you both know, hard money and private money tends to be more expensive than you would go to the bank. So the way we assess risk or manage it is just by working with more experienced borrowers. Instead of making it, higher interest rate, bigger down payments, we just make the guidelines surface around people that have been there before. If this is your business and this is, how whether it's your side business or if it's your full-time business, you have an understanding of what you're doing to to make a solid borrower and complete your end of the bargain. Even if you don't finish the work on time, we can know and look at a deal and connect it to the borrower and know our exit strategy, whether we have to step in and do the work or just knowing that they've been there before and they have other financing for when they're done, or if, whatever the case may be, to get our money back. So it really is just working with people that have been there before. Experience really matters. So some programs, if you don't have experience, you really wouldn't qualify.
Are there still loans out there that are solely backed by the corporation and not the individual? I know I have a few commercial loans, and I thought, oh, I get an EIN, I get a business, I'm in business for a few years, I'd be able to get it through the corporation name, which in a sense you do, but of course it's still tied to my personal like social security number, right? Like I had
Yes.
to personally guarantee the loan for the company. Now, is it possible to do it without? Is there a pathway to complete that without backing it?
No, it's always going to be the case where you're going to personally guarantee it and have to have your credit pulled. Mortgage might not show up on your credit, but we're going to need a borrower to guarantee it. Now, we used to let people close without entities at all and just do, themselves because that's sometimes what people prefer to do, but we don't even allow that anymore. So although the business will, you'll be signed in your business name, like you mentioned, you'll always have to personally guarantee it.
That's good. That is good. So, like, what are some of the challenges that you've encountered with dealing with some of the people that you've lent out money to?
So challenges. So when you say challenges like that prevents deals from being good
Closing.
loans.
Yeah, from being a good loan or from them faulting, or like, do you see the signs like when you're like, let's say someone looks perfect on paper, like they have the additional properties, they have like the experience, but then you start to get that itch, like, I don't know if this is gonna close on time or it might not fall through or something.
So I'll say if something doesn't close, it's never on us. We
Mm,
do have situations where we have to adjust. Like if your ARV, if your after repair value is not the 350 that you're suggesting and it's closer to 320 or 315 based off the appraisal, then we're gonna have to adjust terms. And sometimes in those cases, people can't wrap their mind around putting more money down, even though the deal shows that there's not upside to it. So I think the struggle has been getting people to understand that not all deals are good deals. You might have these projections on ARVs or the famous, I know I could sell it for this amount.
yeah.
I know I could get that. That's fine, and I've seen it happen, but I can't override what I'm looking at, like what the appraisal tells me and guidelines tell me I have to adjust. So getting people to understand that is a little rocky, especially if they're first time using hard money or private finance and they don't understand the rule, the 70% rule, the 75% rule, whatever it is you qualify for. You just can't, there's nothing that I could do. I can't even go 1% over or half a percent over. It's pretty black and white. I think a lot of times people just they can't wrap their mind around it. They don't want to because they're just thinking about the money. They're just thinking about I'm just going to sell it for this and I'm just going to keep doing it over and over and over. But in this climate, if the deal's available, then you always got to take 2, 3 looks because you guys know how tough the market is.
So
Yeah.
Yeah,
are people really still doing like bird deals, or are they really flipping them, or are they refinancing and keeping them?
that's a great question. A lot of people are keeping. They're holding, they're refinancing using. We have a program, a DSCR program. I'm sure you guys are familiar. Debt service coverage ratio is what we use to get people their interest rate. So once you're done with the work, you get 75% of what it's worth, and we'll give you a rate depending on how good that ratio is and comparing your rental income to the debt on the property. And they hold it. They hold it even if let's just say it's not a whole bunch of equity. Like upstate New York, I get a lot of business upstate New York, but you're not talking about widespread. The spread's not much. It's enough to get you some equity, but not enough to usually pull out what you put into it. Just kind of recoup some of the money you put down, but the rental income is solid. You know, we're in a space now where flipping is hard. It's just hard to do. The money's expensive. People, and then when you sell, people are gonna buy you down anyway. People are gonna find different ways to shave 5, 10, 20K. Then you got broker's fees. So holding allows people to, once the rate comes down, the option of lending against it or selling it later on. So most people are just finding themselves holding. So we're getting a lot of two families, not a lot of, if it's a single family, more than likely people try to flip it. But anything with more than one unit, they're holding on to it. It just makes sense.
So in this market with all the uncertainty, do you think that interest rates will continue to go up, or is there like sunshine at the end of the horizon when we see some rates?
You know what? What I really like about my side of the industry is no matter whether the rates are going up or down, because I've heard all the geniuses give their spiel on it, and I could say I don't even like answering it anymore because I'm seeing that new people are going to invest or they're
Yeah.
not, and then the new investor comes in and it makes sense for them because they're basically just telling us, look, you can invest, it's just going to cost you more, which means it's more valuable. So if you're waiting for it to go down, or if you're, comfortable where it's at, I don't even think it matters anymore. You just have to be willing. You have to be prepared. You have to be doing the right deal that's making you enough money, or you have to have enough cash flow and liquid to do the project. Um, we're talking about a couple $100 a month as far as interest rate go. If you're doing a fix and flip for 12 months, so it's not going to make or break the deal. The rate is not the problem for a lot of these guys. It's just more conventional because if you're on the conventional side, you're buying a house for your family, you might have just your job. Your job is how you manage it. You have a pretty based and consistent income. Investors, I see that they find it, they adjust. We have to adjust. You find something that makes sense. If it's the rental income that gets you, if it's the equity and doing a quick flip, the rate shouldn't stop you. If it does, then you're not really, you're
Yeah.
not really ready to invest. At least buying a home is a completely different conversation. I have no clue.
Yeah. So with all that, like, With all the success that you have, like how do you define success and has that definition changed over time?
I think success is exactly what motivates you. You know, if you have a goal and you accomplish your goal, as long as it's something that you strove about, you know, you were set out to accomplish and you did it, that's success. And chipping away at that every day should allow what success, the definition change as you knock your goals down. So if you know, your goal is to do one flip and you do that one flip, something like you said, Gavin owns all of down south. That's what you said. You said Gavin has 40, his portfolios through the roof, and he said, hey, look, but that's just mine. Everybody's right where they are. That's success, I think. Doing what you can.
That
Huh?
note to the people, Gavin does not have 40 properties down south.
No,
That was an analogy. It was an example.
it was an example. Don't run down on Gavin now,
Please
y'all.
don't.
But I think it's, yeah, that's what I think. I think it's just what it looks like for you and maximizing, you know, yeah, the opportunities that are in front of you.
That's what's up. So like since you have a daughter, do you teach her money principles? I know she's young, but like are you starting to like tell her what's a dollar, you know, what's a quarter or teaching her how to save?
Yeah. We do the lemonade stand outside the house. You know, we got the
Uh,
lemonade stand out back for us. So, you know, she does that in the summer. She has an understanding um of what, you know, different coins, currencies, how to market about them. She got a piggy bank in the back. She's always asking me for money, so she damn sure knows what it is. But yeah, she's only 5, so I implement it as much as I can in ways that it makes sense for her. But she watches, you know, these Gracie Corners. Cartoons are different now. They're teaching you how to run a business through these dance. All you gotta do is put a dance and a tune behind some of these cartoons, and I'm surprised at stuff that she's learning just off of that. So she has an understanding, and she's not a huge. I can say naturally, if I give her some money, she's like, "Yeah, I'm gonna go stash that. You know, I'm gonna go put that away." If I give it to her, if it's my money, we're gonna spend it. But if it's her money, she's like, you know, I want to save this. You know, you know, it just feels good to hold on to. So I think we're doing something right.
Yeah, you're definitely doing something right. Because I know little kids, you give them money, they want to go straight to the corner store.
Straight to the corner store. Right. So I guess that helps my daughter. So she doesn't eat meat. I don't eat meat. Right. I haven't eaten meat in like 10 years. So she's never had it. She's not a huge sweets girl. So like when you think about what you spend your money on as a kid, it's usually that, like you said, the corner store run. She it's not that. She just allured by you know, when you out and about in the city and stuff like that. So she's a good saver for now.
That's
So, what
awesome.
region do you serve? You mentioned upstate New York. You mentioned the city.
Hmm.
So, I think you're probably closer to New York City. But in terms of the business you're able to do, is it nationwide or is it just based on your area?
So another cool thing about the commercial space, the private money space, is we're nationwide. I'm licensed here for New York on the conventional side. So I'm only if you're doing conventional financing here, FHA, you know, just programs for just single families for your family. But nationwide, man, I'm in Florida. I got business partners in Florida, out west, upstate New York is very serviceable for us. It's very popular for us.
Which towns would you say are popular right now in upstate?
Rome, Utica, Elmira, Buffalo is always pretty consistent. Um, Oneida, you know, these college towns. There really anywhere where you could think like Syracuse, any of those college towns where it's you got two, three, four families. That's where we get consistent business from. You know, guys that have been in the industry they've been having multi-families their whole life, never heard of private financing or long-term private financing. So when we meet these guys, we're usually, you know, it's like a match made in heaven, and they do business with us for a long time.
What would you say the interest rates are right now if you're doing something at 70 or 75%?
So if you're doing a fix and flip loan, if you're doing a fix and flip where we give you the money for the construction and draws, you're going to be looking anywhere about 10 to 12%. Right. So it's going to be pretty consistent at about 10 to 12%. If you're doing a 30-year, once you finish with the work and looking to refinance and cash out, we're anywhere between 6.9 and about 8%. You know, that Where you land depends on how good the ratio is, the debt service coverage ratio, and your credit.
So most people land between 640, 700, or let's just say 640, 680, because 700 is good. So let's say fair, and they're just refinancing, putting it on a 30-year note with income coming in.
That's tricky. So if you're below a 680, our best DSCR program, you're not going to get the best rate. You're probably going to be closer to that eight, maybe even pushing into the eights realistically. Or what we'll do is we'll drop the LTV down to like 70%.
You have to. I know what you mean by LTV, but you have to explain it for the people who
Got you,
don't.
got you. So LTV is loan to value. That's basically your loan amount, how much you're gonna get covered by the lender, how much you, and then in reverse, that lets you know what your down payment is gonna be. So if you're receiving 75% loan to value from the bank, you're putting down 25% as a down payment. So loan to value is very important because the higher your loan to value, the less money you're putting down as a down payment. So if your credit falls below a 680 on a 30-year mortgage, you may lose that 75% LTV loan to value on the new value of your property, which means less money in your pocket at closing from the cash out. So that could probably keep you in a decent rate, but losing that 5%, 10% may make the break the interest for somebody in the deal.
It's not really losing though, is it? Because that just means it remains in the house.
Absolutely.
If people a lot of time get caught up on just making money, they always say, and it's smart. You make money when you purchase, but sometimes it's better to keep the money in the house as well. So then you can have it to utilize later, or it could be easier to pay off the loan in the future.
See, that right there is it's a great perspective, but see that's because you're experienced, so you know what the bigger picture is, the long term goal. Some people, may it's not as easy to wrap their mind around that. You're paying yourself. Like you said, you're keeping yourself in a better position for the long term, possibly, and there's always room to improve your credit down the line. So that's a great perspective, and it kind of makes to my point that when you know what you're doing and you know what you want and you've been through every scenario when it doesn't work out your way, there's never really a downside or there's no really a risk as long as you have an approval still on the table. Till the lender says no, we can't do it. It means you still got a good deal. It's just going to look different.
Yeah, adding that additional stream of income is necessary. If you really want to do it, then you make the sacrifices before you get to the table. It's
Absolutely.
really like you said, going back to the point, it's either you're gonna pull the trigger and be prepared, or you're not. And when it comes to commercial lending, a lot of time people try to jump from residential into commercial, and it's really a different ball game.
Yeah, absolutely. All great points. All great points. And it's something that you learn as you keep going. Like you said, it's not built for everybody. Everybody, sometimes FHA just makes sense if you have the time. Sometimes conventional financing makes sense if you have the time, but you got to be able to learn on the fly. You got to be able to learn and grow with the industry so that you could, take advantage of it.
But speaking of preparing for the commercial industry, because that should be the goal, right?
Absolutely.
We all grow up playing basketball in our neighborhoods, but we or any other sport, but then we really envision playing like in the arenas, right, in stadiums. So that's the jump from residential to commercial for me. But what's the benefit you would say from for one developing their portfolio around residentials so that they're able to jump into commercial? How do you view someone who's coming to you for money to close on a deal when they have limited residential versus, I guess, more experience with residential?
So how do we view them? How do we view them? You're saying so. Really, everybody has their own process in which works for them, but we always, I personally take heed and usually build really good relationships with people that are already thinking about scaling. So like this, it's not easy doing construction, whether it's a single family or if it's a multi-family. So I think when people realize how much work it goes into it, if naturally they're wanting to say, okay, if I'm doing this much work, I might as well do additional units. I might as well get more bang for my buck. In the on the back end, I usually just build. We usually build more of a personal relationship because you're entrusting me to help you get there. Whether or not if people wanted to stay in that space, I usually advise it to look at multifamilies, look at the commercial space so that you can get multiple sources of income on your portfolio. But the reality is if an investor's looking to scale up, that I always take a personal liking and try to make available all of the changes and different programs that I come across because I meet new construction guys. We just finished working with a guy in South Carolina. He just built a two family. He'd been sitting on his land. He had the land for like 3 years. He was doing single family all around through the town. He finally did the two family, and he was so grateful. He sent us a nice note, sent us a gift because we helped. He didn't think it was possible. It just wasn't on his radar. Not to say he didn't think it was possible, but he would ask questions, and because he asked questions, we put him in a position, and he's not even flipping anymore. He's just holding everything.
So, how did you walk him through, or help walk him through the process of that, right? Because it's really one additional unit, but of course, when people delve into that, it's pulling permits, bringing it up to code, and things like that. So, what guidance did you guys provide?
So our guidance really comes from just getting them to wrap their mind around the financial gain, number one, right? So we broke down his portfolio for him and all of the single family homes that he was doing, and we're like, look, you're making good money for sure, but you have these big plots of land that you're buying. It's going to cost you 30. It was buying it for like 30 grand. So that 30 grand plot of land that you're buying, instead of putting single families on there, we did like a mock deal for him to see what it would look like in one. The cost only went up like another 70 grand, right? To add that additional unit and whatever ground he had to break for water. But we just did a mock deal. We did a mock deal, let him know where to find the comps because there's not a lot of multifamilies in where he's in South Carolina. So his area, we had when you're doing commercial in our space, anything more than one unit, it's not just comps in that area. We'll go outside of the zip code to justify the comps and the rental income. So we were telling him, instead of looking for these last 6 months single family homes that were sold, you have way more flexibility to justify why your ARV is going to be what you're not used to. And he was a little hesitant, but we did the mock deal. We let him know, hey, look, trust that the rental income is solid in this area. Most people are renting. He didn't even know that. Most people were renting homes in the area. So when we went outside the zip code and came across complexes, I did a mock deal for him, did the math, and he hasn't done a single family. He doesn't plan on doing a single family since then. And it wasn't any additional steps for financing. It's the same steps. You're putting a little bit more money monthly because it's a bigger loan amount. But again, it was a 70 grand difference. So when he was able to wrap his mind around a 70 grand difference in construction money that we're giving him anyway, it was just from there he was able to put it together.
That's dope. That is definitely dope. I mean, as I was listening to you, it was kind of like broadening my mindset because I was speaking to the um oh my God, my man just the zoning officer for Florida. And they were telling us that the layer area where we bought the property, it's commercial, is zoned for commercial or residential. So I was like, oh my God, the possibilities are endless of what we could put. So as you were speaking, it just I was like, huh.
Right, and that's another comment. You asked me about that. I didn't answer, but the so we have nothing to do with when you guys go and get the zoning information. We usually just get that information on either expect you have it laid out already, or we found out on the appraisal. He found out for him. I mean, he even thought the permit was going to be more. His permit was like $90.
Mm.
It was like 90 bucks in comparison to what he thought it was going to be a couple thousand. It could be in some cases to do it. So it all depends per zip. He was even learning a lot. That was more beneficial for him in the long run financially. But for us, usually we find that out if it's a problem on the appraisal. So for him, he was able to learn something new, just like you did.
Yeah, for sure, for sure.
Yeah.
And it's crazy because calling them offices, they don't be answering. Like sometimes you feel like you gotta just show up.
Yeah, no,
You
because
gotta be persistent.
you find out real quick why some people just don't even get, like, they find themselves in trouble. They just don't even bother with some permits. You know, you got some guys, because some of these counties you don't get a response. You don't get timely responses. Rather, they kind of work on their own accord. You know, their own time. And I think every county's like that. Upstate New York is horrible, horrible.
Yeah, we're definitely going through that in Pennsylvania,
Mm,
in the Pittsburgh area. Binghamton, Broome County, Johnson City area, so pretty much the same. You have to go into the offices, but once
yeah.
you develop a rapport, it's pretty much you get their timing, because some people expect offices to close for lunch at 12. Yeah, not all offices close for lunch at 12. Some will close at 1,
Right,
not return until 2:30. Some will close at 11, and
right.
then not return until 12:30. So it depends on the culture of the area.
Absolutely, absolutely. The smaller the area, the more their own rules kind of come into play. But no, you're right. It is county by county, I guess. But you say you're in Pittsburgh. Pittsburgh is solid. I got a friend of mine. He is he built a CRM. He's a hard money lender as well, but he built a CRM and he finds deals for investors, and he loves Pittsburgh. That's like when he's looking for deals to source out the people and put on the table, he's underwriting in Pittsburgh all day long. Actually, he loves the area, loves the upside there as a lender, but solid market.
Yeah, Pittsburgh needs a lot of work for sure.
Yeah,
This is
yeah.
cool. So what impact do you hope to leave behind, and how are you actually building your legacy?
So the impact for me has everything to do with the mark I want to leave here. I'm looking to inform as many uh, any investor, but investors that look like myself, and educate as much as possible to be able to leverage your options for financing. When I first got in the industry, I didn't want to make it about race, but I didn't work with any black investors. I couldn't. They were there, but getting deals closed and getting them to understand and wrap their mind around what it is that I was offering. I just wasn't finding the right way to make it personable enough to do business. So when you talk about finance and you talk about our people, I wanna kind of be the face of private money. Whether you want to get into hard money lending, get your own fund, get your own warehouse line and lend, or if you're an investor, I want to be fully resourceful to investors, not just for hard money, but new construction, conventional, the whole nine. I want my daughter to fall into the industry. I would love for, if I have additional kids, for them to follow in that same and educate. It's all about educating. I think our people need education on just outside of the conventional way of doing things, because there's so many different resources when it comes to how to get into real estate or get into anything that you want to do and use. But sometimes you got to go past what's just in front of you. And I want to be the face of all good loans, good, not predatory loans, not things that put people in bad spots. I just want to educate, help people make their money, make my money, all in that order. And that's what I want my legacy to be for our people, for sure.
That's good. That's good. So what are you currently doing to like educate the people? I know you're interviewing with us. Actually, that's one thing. But besides this, like how can people reach out to you? How can they find out your information and your course if you have one?
So I do seminars usually whenever if people ask, like if I get enough people asking to do consultations, I'll make a suggestion on seminars for groups of 10, 15, whoever's that, wants it or needs it. So I do that all the time. But Instagram has been a game changer for me. Social media has allowed, I've been flown out to California to speak to schools and educate young kids on this industry, give them my story, and from there asked to do different interviews like this to help, push what I'm doing. So that's one way. And I'm always networking. I'm always outside. I got vendor tables that I do 3, 4 times, you know, a month for the same organization. And then I just go and just shake hands and talk to people. And I'll go there with you right on the spot. If you ask, I'll tell you. So I'm just always willing to just talk, willing to explain, whether that's Zoom seminars, talking, engagements, panels, whatever it is that gives me a chance to talk and speak, I jump on it. So my social media, Harmony Pro 7. I have a TikTok, the same handle, and then I'm always, my number's up there. So you can just straight up call me, and we go through deals right on the spot.
That's awesome. I hope people take notes. So what advice would you give to someone who is struggling to take the first step towards their passion?
I would face the fear, which is kind of understanding what you're scared of. You got to know what, because there's always one specific thing that's holding you back, whether it's just the attention or maybe worrying about failing, and just wrap your mind around it. Once you wrap your mind and embrace it, embrace whatever that fear is, um, think about it constantly. Don't try to just suppress it. Think about what scares you. And the more you think about it and realize you have to face that hurdle, when you get to the other side, you get rolling. Because it's not a physical barrier, it's all mental. So you got to exercise it like anything else. So if it's something holding you back, or if you're missing that one step, put yourself in uncomfortable situations and get comfortable. And I know that's a lot easier said than done, but that's the only way to face mental barriers, because ain't nobody think about you. Everybody trying to get their money, everybody trying to do their thing, everybody has the same concerns, no one wants to fail, it's all the same. You can't worry about it. You have to face it, embrace it, and just take the losses, take the wins.
That's
Can you
good.
share a pivotal lesson that you learned over the course of your journey?
For sure. My first deal, and this is just about having good relationships with people. This is just being solid. If you never know who's gonna be the person that you have to circle back around, and even if you don't ask for help, there might be the person for help. My first deal, I went to school in Maine. My first 2 years of college, I played football in Maine. I went to school in Maine. And I hated everything about Maine, right? I was like not optimistic about it. I just liked playing football. It was an opportunity to get out of New York. A couple of my friends from the city, we all went together. So years later, I would always be like, why did I go to Maine? Like I was like, I went to, like, what was I doing? Like I'm from New York City. I understand I was playing football, but as an older man, I was like, it's super random that I was in Maine, and it's always like I bring it up. And people are like, what are you doing in Maine? My first deal, when I started actually, when we got our first warehouse line and we were actually controlling the money, one of my teammates' brothers, he was following me the whole time on socials, and he sent me my first deal from Maine. And I think that teammate, he was just one of those guys I just was respectful to, would talk to. We just always cool, always had a good rapport. He sent me my first deal all the way from Maine. So the irony and not understanding why I went to Maine, but I always just stay solid with people and just build good relationships and just kind of, I just with myself. And that bought me my first deal, like my first deal. So I mean, you can't really make stuff up like that. So I would say the biggest thing I learned is just, people, it's a small world. 6 degrees of separation are very real. So just being honest and trying to do right by people, even if it's not just business, it goes a long way versus having burnt bridges and just, even if you're not super close, if you're in a close proximity of somebody like a teammate, a classmate, a friend, somebody you work with, you never know where that's going to go. So I would just say, just being solid. Gotta be solid with people.
Which part of the city did you grow up in?
I grew up in Harlem. So
Okay.
I grew up in Harlem. I moved to New Jersey for a couple of years, came back, lived in the Bronx, and then I went away for school. So now I'm back in Manhattan.
Yeah, Maine was pretty random, but
Maine, right. Right,
but but with that
You picked up
said, right,
skiing?
everything
right.
happens for a reason, and now you can go up there and vacation and spend time with the person who bought you your first deal, and it'll
See,
be even more impactful for your daughter when she gets older. She'll see
exactly.
Maine through a different lens than you did because of your experience.
Absolutely. Absolutely. No, powerful point. Very powerful point. Because it was before, it was just damn, we back here. Like now, now it's like, wow. So that first trip back, I plan on going to homecoming. So I went to two schools. I went to school in Maine and I went to school in Buffalo. So clearly I love the sun and warm weather. Clearly. But I'm gonna go kind of retrack my steps, and I would love to have my daughter there and do the homecoming and kind of reconnecting with people. So that's a powerful point for sure.
Yeah, connections are important, and that's dope. That's dope that you had a different experience from like living in New York City to being in the woods, maybe picking up skiing, snowboarding. Like that's a whole different experience. And I feel like more people should do that. Get outside of your comfort zone and try something completely different to even know if you like it, or maybe you're a cabin guy now, like you know?
Right. No, it's the truth. I know some brothers that went up there and they never came back. Maine was like I'm good. Not me, but I guess just being there, just like you said, everything else still stands true to what you said. So no, I'm grateful for the experience.
So if you could be remembered by one thing, what would it be and why?
I think I know graceful. Like I just I don't like to be known as a graceful person. Um, we all tend to judge. I don't think we can help it. A lot of times, I think we have short, especially working in sales. You like to pick and choose who you want to work with, and you think it's going to end up being, oh, this person. I'll make money with this person, that person. No, I just try to give grace and have patience with everybody. And I think as long as I can maintain that, that helps me feel good because it opens up the guy or the girl that might be timid to ask questions or reach out. I don't. I rather my reputation be that and known as just being fair to people, doing good business, having good conversations, and just being reliable. So I say graceful in all of those things, being graceful in all of those things.
That's good. That's good. As you were speaking, I was thinking of this guy who was a mechanic who I know that's so completely different, but one of the things that he had told me was that you get more with honey than with salt and vinegar. So it's like that goes a long way how you treat
Absolutely.
people, remember how you made them feel. So if they had a good experience with you in a business deal, they're gonna recommend you to other people. So it's actually grows your business tenfold how people perceive you, their interactions they have with you. So that's some good gems that you dropped during this whole entire segment. Like,
Oh, thank you.
yeah, I just want to say, like, thank you so much for giving us the opportunity to interview you because I know you could have been doing 101 other things, but we appreciate the time that you took to be with us. And I hope whoever is watching this episode that you guys take some notes, jot it down, and go forward, start your dream, invest in your real estate, whatever you want to do. Just pursue it and go for it. And thank you.
No, thank you guys. It's a really good thing that you guys are doing. So all thanks to you. I appreciate it, and I look forward to watching when it comes out. And why I've been watching every you guys page since you reached out. So kudos to you guys
Thank you. Thank you.
I appreciate it.
for sure.